Good morning. This is Larry McMillan with a market update on Monday, November 16th, before the market opens. Well, last week was a pretty wild week. Gapped very much higher on Monday, but the old sell in the news crowd showed up and drove the index back down to where it actually didn't close the day at a new high. It went lower again the next day, but then began to recover. And by Friday, we had actually closed at a slightly higher high than we had in last September. So we now have the closing, a new closing high. And of course, we've got the new intraday high from last Monday. Last night or tonight, tonight, Sunday night, November 15th, the market is rallying. And so it looks like we're going to open higher again today. So from an SPX chart standpoint, that's all bullish. And so now we're looking at resistance at the old highs, which I believe is 36.44. And yes, that's right, 36.44. And support is probably the first support level, probably around 3,500, maybe a little bit lower than that, 34.85 or something like that. But if we fall back too far below that, then you're back in the old trading range again, and you've sort of negated the breakout. So right now, it's important for the bullish case to hold the upside breakout over 35.88. The equity-only put-call ratios continue to remain on sell signals, mostly because they were so low to begin with that they're just drifting higher. We did a study over the weekend, and it's published in the Option Strategist newsletter, that shows that this year, 2020, we've had more low readings on the equity-only put-call ratio than ever before, and by quite a bit. In past occurrences where we did have low readings that lasted for a good portion of a year, the next year was not a good year for the market. So that particular indicator is saying have some caution about next year. Meanwhile, pretty much everything else is bullish, though. The breadth oscillators are on buy signals. The cumulative advanced decline lines, both New York Stock Exchange and stocks only, are making new all-time highs. And perhaps more importantly, what we call CVB, cumulative volume breadth, is also making a new all-time high. New highs issues just are dominating new lows again, so that's positive. Although surprising, they shot up to a very high level early last week and haven't gotten back near that level again yet. But perhaps today that will be a little more positive there. VIX has been still a bit of a strange animal because it's remaining very high. Um, I guess mostly because of coronavirus concerns, but there still are some election concerns out there. And so the VIX spike peak buy signal that we had on October 30th is still in effect and will run through most of the month of November, as long as it's not stopped out, that is. That's positive. The VIX crossover buy signal was also positive. That has already sort of outrun its usefulness, though. That's a pretty short-term indicator. Meanwhile, the term structure of VIX is getting a little bit more interesting. The VIX futures are generally trading at a premium to VIX, but what's happened is the first 3 months are sloping upwards slightly, and then after that, it's very flat. So, um, that's not a bullish term structure completely, but it's not bearish either. But what it is interesting is that traders are still worried about volatility, at least up into January, or maybe even February now, with the January futures being the highest priced VIX future at this point in time. So to sum it all up, it's pretty bullish right now. I would still use a lot of caution. We'll still be trading signals from both sides if they occur. But right now, the bulls pretty much have it their own way. And I would expect there could be some problems on the horizon, but they're not showing up in stock prices right now. And since we're not really fundamental analysts, not at all, we're following our indicators, which are for the most part bullish, except for the equity-only put-call ratios. So this Saturday, we're having one of our Saturday webinars where we discuss the market, have a lengthy question and answer session, and then a seminar on intermarket spreads. So I think you'll find that interesting. Also, stop by our website, take a look at our newsletters. As I said, there's a new article just published in the Option Strategist newsletter as well. So all of that, have a good week trading, and I guess get ready for Thanksgiving.